What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. What is up, guys? Welcome back to episode 17 of the M1 Journey. First one in a couple of weeks because I was out with COVID, but luckily I am back to 100%, and I'm very grateful for that. So it's been a wild couple of weeks in the markets, as I kind of talked about in Thursday's video. If you haven't checked that out, I'll drop a link in the description. Kind of share my thoughts about everything that's going on with GameStop and Nokia and AMC stuff, with the short squeeze, which is still going on as of today, although today wasn't as crazy as I kind of thought it might be coming off the weekend, but still it's been a wild roller coaster. Even outside of all that, we've had some pretty sharp red days, but we've also kind of had a little bit of turnarounds with some big green days as well, so it's kind of been a little bit of a mixed bag of sorts. So kind of see what happens in the future. I think we're kind of coming up on a little bit of some reckoning with where the economy currently stands. So we'll just keep an eye on that and kind of hang on through this kind of wild ride. But as far as anything else new with the channel, not too much to speak on. Of course, if you enjoy my content, enjoy my videos, please like and subscribe. I really appreciate it. I will be talking about a stock this week on my Let's Discuss video, so I'll put out a Twitter poll. So if you'd like to choose something, please vote in that. I always take your guys' suggestions, but otherwise I'll talk about whatever is the winner in the poll. So yeah, I'll make my disclaimer. So of course, guys, I am not a financial advisor. I am not an expert. Actually, this will be my last day of saying this, but I am just 20 years old. Tomorrow is my birthday. So after that, I'll start telling you that I'm just 21 years old. So, but yeah, please do your own due diligence and research before making any investment decisions. You know, a lot of people are on YouTube telling you what you should or shouldn't do. I do it strictly as an advising role and for your guys' entertainment. So just please be aware of what you're doing before you do it. And with that being said, let's look at the portfolios. So it's kind of a update today. It appears up about 0.5%. Market just closed a few minutes ago. But for the week, it was a little bit of a rough week, down about 2.5% total. So first significantly down week we've had in a while. So not too awfully bad, but still you'd like to see a little bit of a turnaround. But for the month though, we're down a little bit less than what we were, but most of that again was caused by last week's downturn. But for the quarter still, we're having a tremendous quarter, up about 13.8%, which is an astounding quarter, best I've ever had for sure. And then all time we're still up about 20%. So things still relatively pretty smooth, but having a little bit of volatility kind of brought things down just a hair. So right off the bat, you may notice I have this kind of gold line around my name here. I am actually finally an M1 Plus member. I was lucky enough to receive a free membership from M1 Plus, or from M1 Finance, to get M1 Plus, so I was very happy about that. So thank you to M1 Finance for doing that. So yep, I got a free subscription for a year to try it out, and we'll see how I like it. So actually, for the first time, I did use the afternoon trading window for my bi-weekly deposit, just to try it out, see how it worked. So for my bi-weekly deposit, I made 3 purchases: Verizon, Costco, and P&G. These are 3 companies that have really kind of been beaten up a little bit over the last couple weeks, so wanted to dollar cost average my way down on these positions a little bit. So really not too much else has gone on since I've made a video last. I made a purchase here on the 19th for AMD, Brookfield, Microsoft, and P&G again. So these are just some things that I was looking to buy a little bit more of as their share prices dropped. I did get one dividend last week, and that was my SPHD ETF. So as far as what else is going on in my portfolios, my Roth IRA still pretty steady here, down just a little over 1% over the last week. For the month, though, we are up just a hair. For the quarter, again, tremendous quarter, just like my long-term, and all-time is about the same as well. So all pretty smooth there. Didn't really have any activity here either. Last week I made my usual 10 purchases, so nothing really notable. As far as my aggressive portfolio, however, things have really been flying. I am actually up over the last week about 3.4%, and almost all of that has been driven by Workhorse, which I will talk more about later. But Workhorse is up about 60% over the last week. DraftKings also had a good week, up about 6.5%. So the rest of these were way down, but I was still up for the week. And then all time since mid-December, so just about a month and a half now, I'm up about 15%. So very nice return in a small amount of time. But since this is an aggressive portfolio, it could easily go the opposite direction. So let's hope that doesn't occur. So again, nothing too interesting this week, but just wanted to show you guys what was going on with the portfolio. I might be making a change in my aggressive portfolio in the near future. I may be dropping Carnival and Boeing from this portfolio, not just because of their underperforming, but I'm just not sure if these are two stocks that I'm really interested over the long term. So I may go to 9 holdings in this portfolio. I may add Virgin Galactic to this portfolio, which is the other stock I'll talk about more at the end of the video. And then another change I may make in the near future is I may drop two holdings from this portfolio as well, 2 of my smaller ones. I may drop Dominion Energy, and I may drop Procter & Gamble. These are 2 holdings that I'm down almost actually exactly the same amount on. So I'm going to give this maybe another week or two to see if I can either break even or even get a little bit in the green. But for now, I'm going to try to dollar cost average these positions, and we'll kind of see what happens. If I do drop those, I probably won't add any others. I'll probably keep this at just 30 positions total. So yeah, that's about all I have for you this week. So I kind of want to move into the next part of the video. So it's kind of a short portfolio update for the week. That's because I want to take the time to talk about 2 of my favorite growth stocks out there that I'm starting to invest more and more into. One is Workhorse Group, and the other is Virgin Galactic Holdings. These are 2 companies that I like a lot for varying reasons. I won't say that they're definitely sure things, because they're not. So there's definitely risk involved if you do decide to look into these a little bit more. But for companies that are kind of on the cheaper side of things, on a little bit lower value, a little bit lower share price, these are 2 companies that I think have really vast growth potential and long-term growth prospects. So kind of start with Workhorse. For those of you who aren't familiar, it trades under ticker symbol WKHS. They are a commercial electric vehicle company, so they kind of specialize in delivery trucks, semis, anything in that commercial space that most companies are going to use to transport product, make deliveries, transport materials. Anything like that is what they're looking into producing and selling. So I kind of like Workhorse because there hasn't been as much attention brought on that as I think maybe there should be. mass transportation and delivery and freight and cargo are such a large part of our economy anymore. If you just look at like Amazon alone, making deliveries, making postal deliveries, you name it, it's out there, and Workhorse is looking to fill that need. Now, that's not to say that there's not other companies out there, but I think if you weigh where they are at versus maybe where other companies, more established companies are, I think Workhorse has more upside from where they currently stand. So Workhorse is valued at around $4 to $5 billion by market cap as of right now. One of the big reasons I'm jumping in even more is with the new Biden administration. Anybody who's invested with them might have seen last week that they are pushing to flip the federal government car and truck fleet into all electric in a couple years in the future. So that was a big boost for Workhorse, and the whole electric vehicle push to begin with is going to be a huge boost for them regardless. So kind of different from like a Tesla, which really focuses on vehicles for personal use. Workhorse is kind of filling a different need on the other side of like business and industry. So that's kind of one of the things I like about them. As far as a price goal, honestly, I could see $100 upside from where it currently is at about $40-ish, which is really almost double where it was even a few weeks ago. So we may see a little bit of pullback from there before we get to new heights. And if we do see a pullback, say it drops from that $40 high to less than $30, I know for sure I will be continually buying more and more shares, especially at that price point. So I highly encourage any of you to look into it well, see what you think, and if you agree with me or disagree with me, share your thoughts in the comments. So Virgin Galactic Holdings trades under the symbol SPCE, which almost spells out space, which is exactly what their industry is. They specialize in developing commercial spacecraft and kind of being an industry leader in space tourism, basically. They are pretty early in their development phase. I think they expect to try to get passengers into low Earth orbit by the end of this year or early 2022. So things are starting to move on that front. Definitely a lot of risk involved with this particular stock, definitely more so than Workhorse, because it's really pushing the edges of what has been done before. Obviously, there's not ever been a company before that has been able to commercialize spaceflight for the average person. Well, not really average person, it's going to be ridiculously expensive, but for non-astronauts or non-scientists. So it's definitely a lot of risk involved, because anything that could go wrong probably will in the world of science and exploration. There's definitely going to be a lot of learning curves, so that could really dampen expectations for them for the next few years. So this would be a holding for the considerable future, a probably several years long holding if you do decide to invest a little bit of money with them. They are currently trading at almost, or actually over $50 a share, right around 55, I think, as of today. I would expect a little bit of a pullback from those highs, because I think to some degree they have also been propped up by the short squeeze of other stocks. So if share prices retreat below $40 a share, like Workhorse, I will again be buying significantly more shares and holding on to them. This is definitely the riskier play of the two. I want to definitely stress that enough. Obviously, space travel is very dangerous, very expensive, and very hard to do. So any potential problems could, definitely lower share prices and expectations and other factors. So right now they're kind of currently valued at around 10 to 12 billion dollars by market cap, which is a little bit on the high side for where they currently are in their development stage. So we'll kind of see how that plays out. But for either Workhorse or Virgin Galactic, if you got a couple spare $100, maybe look into putting in one or two of them, pick up a few shares. I have pretty small investments in both, in some of my personal accounts and including my aggressive portfolio. So we'll just kind of see. Definitely two companies that I could really see taking off over the long haul. So I think those are two of my favorite growth stocks. There are some others out there, of course, I like Teladoc Health. That's another one that I'm invested with that I think has a strong long-term outlook. But they're a little bit more expensive by share price. So not really one I wanted to talk a lot about today since they're not on the cheaper side of things. That's going to kind of wrap things up for this video. Of course, if you do enjoy the video, enjoy my content, and want to stick around, please drop a like on this video and please subscribe. And also, if you would like to join M1 Finance, now is a superb time to do so. When you sign up and make your first deposit, you will get $30 from M1 Finance as of right now. That is a special offering from them to celebrate hitting $3 billion in client assets, which is a huge achievement for them, and I'm very happy to be a client of theirs and to be a part of their platform. So do that. They're one of the best in the business. I know some of the other brokerages right now are a little bit of hot water, so now is a great time to look at switching brokerages if you are looking to do so. So yep, that link is down in the description. If you haven't yet done so, follow my social media pages at bpruitt_YT on Instagram and Twitter. That's where I share my thoughts when I'm not making videos, so that's there for you guys as well. I've probably rambled on long enough in this video, so I'll wrap things up here. I look forward to talking to you guys again on Thursday, and we'll see what happens the rest of the week. Catch you later, guys.